We're going to talk about Devon right now, and I believe this is the first time I'm talking about Devon on this channel. And so, as I usually do, we're going to scroll out to the monthly chart, and right away, my eyes gravitate to this $40 level. You have a rallying price, two basing candles in the rally out. However, this second basing candle dips its toes down to the $35 level before moving higher. To me, this tells me that the buyers are below $35. All right, so that's one thing to note. Scrolling down to the weekly chart, and this is that wick that we saw in the monthly chart. Again, price came down. You have a gap down, and then price closed green, telling me again that there are buyers below $35. And so when I go down and to the left, I'm looking, and I don't see any real levels of interest again on the weekly chart. So typically what you do is you just have to keep going down time frames. And before we do that, we're going to just place a placeholder at 36 and look at this article coming from investing.com. So on Friday, Stifel had adjusted its price target to Devon Energy, reducing it to $65 from the previous $75, while still recommending the stock a buy. The revisions followed evaluation of the company's recent quarterly performance and updated guidance. Now, the analyst at Stifel suggested that during the period from the estimated year 2024 to 2026, Devon Energy is poised to generate positive free cash flows and achieve a compound annual growth rate of 3% in production. This outlook supports the firm's continuing endorsement of the stock as a buy. Now, that new price target of $65 per share represents a downward adjustment, which Stifel attributes to the latest operational and financial information disclosed by the company. Now, despite the reduction, the target still implies a significant upside potential of 20% discount to where Stifel's calculated NAV, which is net asset value, stands at $81.74. All right, so they mentioned a $65 price target, which is down from $75. I have bookmarked this $35 level, and so we're going to go down to the daily chart. You have this nice support level, double bottom, W pattern, and this would have been a nice level to get long as it aligns with support, and I'm talking about that apex of that W pattern. And depending on how you would have drawn your entry, you did get the price higher, a pullback. This was a great setup before price moved higher. So I have to ignore this $35 level right now, as price is nowhere near it. However, look at here. Rallying price, basing candles in a rally out. And that's the reason why price stopped and went higher. Beautiful level. And it's still valid because price nearly dipped its toes in the upper portion of the zone, right? But the question is, looking at current price going up into the right, to the left, you do have a pivot high here, but then you have some pivot highs further up. And this pivot high is to the left within all this range bound price action, which represents filled orders. And so if I draw a band between support, resistance, And I scroll out to the weekly chart to confirm. $52 becomes my target, and that would be good for roughly a $5 surge from current prices. And so let's see what happens. A lot's going to depend on oil. So if we go into recession, you're not going to need a lot of oil, which Devon then shouldn't need a lot of services from Devon. So we'll see what happens, but momentum to the upside. Your target comes in at $52. Thanks for watching. Subscribe. Please like the video.